Good evening and welcome to our weekly markets review brought to you by SG Futures. Coming at you today on Sunday, the 31st of January. Let me first start by just talking about what an incredible week of trading that was on a very personal level. It was an incredibly tiring week, incredibly mentally draining week. Probably responding to friends and family asking me what was going on with GameStop and whatnot. But really, when we look back at last week's video, a lot of the things we talked about really played out quite nicely this week. In our weekly plan last week, we talked about tentative longs above the 38.20 level, which is just here. So what we're looking at here, by the way, if you've never seen one of our videos before, is a daily RTH candlestick chart on the E-Mini S&P. And we mentioned that we'd have tentative longs above the 38.20 level. So if I'm to mark out last week, we have Monday, Tuesday, Wednesday, Thursday, Friday. So this series of candles in here. So we were tentatively going long above the 38.20 level, which is here. As you can see, when we came in on Wednesday, we'd heard the news about the supposed short squeeze and that some of these hedge funds they're very overly exposed, and it caused quite a lot of volatility and quite a lot of uncertainty in the market, which ultimately caused quite a decent sell-off. And we can see here we absolutely smashed through the 20-day moving average, which is this pink line in here. And on the Thursday, this actually acted as a resistance for the day, so we closed just below the 20. So these are a couple of bearish signals that we're going to put into our narrative during this week. We also mentioned last week that there would be some potential chop in between this particular gap here, which was Tuesday the 19th up to Wednesday the 20th. And that's kind of what we saw on Wednesday and Thursday. And there were really no decent buying opportunities in any of these days, and given that we'd already said we'd be taking only tentative longs above 38.20, these very quickly became sort of selling the rally type opportunities. We can see here of some previous lines that we've marked out that the 38.2350 level is one here, corresponding to a low volume node over here, was pretty much the daily high of Thursday's trade. So this goes to show you that some of these levels do actually work and they do actually play out. A corresponding level down here is the 37.6375, which was roughly the daily open for Friday, and then the other one, which was 37.0475, which was roughly the daily close, give or take a couple of handles. I'm sure you'll give me that. But overall, over the course of the week, we saw quite of a continuation from last week on Monday and Tuesday, and then we saw this enormous gap down on Wednesday, went through the 20-day moving average, and Friday saw a test of the 50-day moving average, the first time in quite a while. We have to go all the way back to October to see when we last sort of flirted with the 50-day moving average. So that's quite important. And as well, we closed just above the 50-day moving average, which is, again, something important that we will carry forward into this week. Really, one of the most important things we really need to cover off is we have an enormous period of balance in here. And I'm actually just going to shade this because it is enormously important. In that this was a previous area of balance, it was a previous area of value. So we can see it's literally just been channeling in here. So we've got a low, a high, etc. And then we eventually have the breakout. So we've returned back to this period of balance. And I don't think the market's is going to carve through that too easily. So immediately coming in this week, I'm looking at what these balance area highs are. So I'm going to be looking at a level of around the 37.20 mark. And that will go all the way down to the 36, probably the 36, 35, 36.40 sort of level, which again is another area that we've marked out on the chart already from previous videos. So these are all levels that we've marked out previously, which we're really going to pay attention to. Down below that, if things do get incredibly bearish, we have an area in here which I would like to mark out, which we expect to potentially see some support. This would require a complete loss of the 50-day moving average, but we have another period of so-called balance in here. And the reason why I'm marking this out is because the 35.80 is a level that we've looked at for a long period of time. It corresponds to a low volume node over in our volume area over here, but also it signifies this is the gap up from the day of the first vaccine announcement on Monday. And I think there's going to be a number of buyers who are potentially going to step in here. And I'm marking out the closing price of that particular candle from Monday the 9th of November, which is 35.50. And I believe that a number of buyers will be looking to potentially step in there. We should know in some of the core stocks, in our big cap stocks, and how they're performing as to whether or not the tide's beginning to turn. So they're things we will be looking at coming into next week. You can see here that we've had a couple of tests of this on, the 19th of November, the 23rd of November. We haven't really been back there since. So that's going to be an area of real interest if and when we potentially get back down there this week. So let's jump across and look at our weekly perspective. So this is our weekly market profile chart. So I will mark out the week that was. So this is our week, and we've got quite an enormous range that we worked with this week. So we had 36.85 as the low and the high of 38.62. So nearly a couple of hundred handles in there, just probably about 180 handles worth of a range. So we've got quite an enormous range to work with. We talked about this area balance in the previous chart, and this really corresponds to this area, these three weekly profiles in here, in that we've got enormous levels of volume and time spent at various different prices. So we can say that these prices are relatively well auctioned, and we expect there to be a little bit of chop coming in here. I said on the previous chart that it's unlikely we're just going to slice right through this, but I would expect that we will see potentially a little bit of chop this week. And we've seen over the weekend that the US weekend markets, I know they're not really a perfect indicator, but they are trading positively. So depending on where the futures open this evening, we would imagine if they opened above the sort of 37.20-ish level, that we can see if we're going to get any sort of a rebound back up towards the weekly value area from last week. But if we open and we chop around in here until the cash open tomorrow, and we dribble lower, then we're targeting some serious downside levels here, and that would be probably the 36.24, which would coincide with this particular gap in here from previous, a couple of lows as well, which is the low with the week commencing the 7th of December and the week commencing the 21st of December. So that's kind of a double bottom, which we would hope would act as support. But if we manage to slice through that, then we're looking at 35.87, and then the previous level I mentioned, which is the 35.50 level in here. We would deem that to be important. But really what we talked about last week, in reference to last week's video, was that we anticipated, let me just remove some of these markings, that we anticipated that this area in here would get filled out. And that's really what happened. Granted, it was in the sort of Wednesday and Thursday trade, and that we've got an enormous amount of volume and time spent there. But one of the important things we want to carry forward is that we closed down here, and that means we are effectively back inside this period of balance here. So it's very, very important where the futures open this evening, where we open tomorrow from a regular trading hours perspective. If we open from an RTH session above 37.20 and we get any sort of bullish momentum, we start to revisit some of these value areas up here. So let's look at things from a daily profile perspective. So we can see here we have Friday, Thursday, Wednesday, Tuesday and Monday. And when we come down here, we have it marked out our previous area of balance, and this is one we've done from previous videos, and it's one we deem to be incredibly relevant. If we open from an RTH session this week inside this green area, then there's every chance that we sort of hit the midpoint, which would be roughly here. I'm just eyeballing this. So the midpoint, which would be sort of 36.70 odd, and then if we smash through that and don't hold it, then we bring the sort of 36.20, 36.23 levels into play, and that will correspond with these lows from in here. So 36.25, we'll call it, thereabouts. So there's sort of levels we're looking at from a daily profile perspective. One of the things that are worth mentioning is that we've had a really, really choppy week, and we have overlapping value between Wednesday and Thursday. We had a value migration lower on Friday, and then we closed below the volume point of control, which is again a little bit of a bearish signal. If we do return back up towards up north of 3700 and 3720. We then begin to start looking at the midpoint of this particular balance area in here. So the low of that balance area will be important. So from an upside perspective, that's 3763 corresponds with the low from Thursday. Again, market profile always shows you this. You will never see this on a candlestick chart. And then we can then hit a midpoint, which will be sort of around the 3791, 3793 sort of level as I eyeball it on the chart just here. If we get through that, then we're looking at again the 3822 level, and if we get over and above that, then the levels from the previous week really come into play, and that will be the 3880 up here. What is worth noting is if we do, in a very strange turn of events, get back up here, we again have an area of balance. So you could say that these 5 distributions are all in balance. Granted, we have these two with overlapping value. We had a value break lower here, then we've overlapping value again and again here. And so we would imagine that these are going to be sort of key areas that we're going to look out for if and when we do get back up here. This is very similar to the downside levels that I talked about, in that the market's not going to just chew through these this very thick area of balance in here. There's going to be a little bit of chop, so it's going to potentially be difficult to trade. I would say the same about this particular area up here to the upside, unless what sometimes happens in the E-Mini S&P, that sellers just completely disappear. So we'll be watching carefully this particular level down here, 3811, right up to about 3822, probably corresponding with this low from Friday the 22nd of January, breaking above that level. Targets probably 3842 to the midpoint, and then the top end, which would be 3863, and then of course 3880 up here. But I think we have a long way to go in order to drive the market back up there. And if the market were to open in 5 minutes time, I'd probably be very aware of a more invigorated seller and more invigorated bears in this market, well, across all of the US markets currently. So I'm going to have a little look back around what actually went on this week. I mentioned at the very top of the video that this was one of the most interesting weeks I think I'd ever experienced trading the markets, and that's out of about a decade and a half, and includes some pretty wild days in 2008. And what's happened this week is, I'm sure as most of you are aware if you're watching this, is that we've had this almost decentralized short squeeze from the users of a Reddit subforum, and they've all come together and they've picked a stock and they've just squeezed the life out of it after they learned that a number of hedge funds were short. And this is important when we come in and try to piece together a narrative for next week in terms of what's actually going to happen. And we need to look back a little bit on some of the selling from last week. And if we pay attention to Wednesday in particular, and probably most of Friday, we need to really try and make some educated guesses about what were the mechanics going on behind the scenes of these particular days, in these particular set of down days. Looking back over Wednesday and Friday, yes, the selling was real. There were real sellers in there. There were people who were going short. There were people dumping stock in very, very key names and key tickers across the indices. When we look at Apple, which is probably the most well-known stock across all of the main US equity markets, reported unbelievable results on Wednesday evening, results that would traditionally have it rebounding towards all-time highs. But then on Thursday and Friday, we just saw an enormous amount of dumping of the stock. We saw down days that were significant for that particular stock. We can start to maybe piece together some educated guesses around this. And we have to think about that there were some hedge funds in this market that we know on Wednesday they were getting so badly squeezed from this short squeeze that they were getting margin called. And when you get margin called, you need to start to dump other assets. And it may not be too far from the truth that maybe there's a number of these hedge funds that had to dump some so-called good stocks in order to be able to keep trading. And that would have been, there's no good decision there to make, but that could be a potential reason behind some of the selling that we saw, particularly on Wednesday and Friday. Friday was a really important day in that it was month end. and you had an enormous amount of monthly options expiring, which may have driven the price lower. And this is why when we open up tomorrow, we really want to get an idea as to whether we're opening above this balance area in here or whether we're not. And if we're opening inside it, then we know what to do. If we're opening above it, then there's a good chance we're potentially going to test some of these levels back up here. Because really, if I look at it from a personal point of view, the selling didn't feel real. It didn't feel like it was fear across the entire market. It felt like there was a significant number of big holders or big whales who were offloading stuff, not because they didn't like the stock or not because they didn't like the earnings. It was literally because they were trapped and they were in trouble. And for me, that probably means that this selling is probably short term. And depending on how this plays out over the next day or two, I'm not Nostradamus, I don't know, I can only really trade what's in front of me. However, if they keep a cap on the losses and these guys can keep trading and they can get some sort of business as usual, then there should be no reason why people aren't picking up those stocks at absolute bargain prices next week. So that's just some of the mechanics that are going on. I think this is a real milestone week for Wall Street, in that typically the retail trader has been at such a severe disadvantage, and we've seen for the first time where the retail traders have come together as a collective and focused on one or two or three particular names in order to compete with some of the heavyweights on Wall Street. And depending on how the funds react to that will probably play a big part as to whether we just chop around in here, whether we go to all-time highs, or whether we sell off significantly. And really, as we come into next week, I rarely pay huge amounts of attention to the news. Yes, I read the news, but I try not to let it cloud my judgment too much, and I will treat next week like no other. However, I will be paying very close attention to how this hedge funds on Wall Street versus Wall Street bets does actually play out over the next week to 10 days. And I think it's going to be really, really interesting. So I really want to try and hear from people on this. If you agree and you think that this wasn't real selling, this was just hedge funds dumping stuff, then by all means stick some notes in the comments. If you feel that maybe it's something else, maybe this is a bigger correction coming, maybe it's a bit of a wake-up call around the coronavirus, and there is real selling in here, again, leave me some comments. We're really keen to hear some other information or other ideas around what potentially might be happening behind the scenes. So that's pretty much it from me and your weekly video at SG Futures. Be sure to visit our website, sg-futures.com/education. There you have access to all of our market profile courses, all of our beginner courses if you've never traded before. And also, we ran a couple of webinars recently. So if you go to our homepage, sgfutures.com, you can see our recent market profile webinar. Be sure to go and check that out. It's free. Go and have a look at it. It really gives you an idea of what we talk about and how we teach market profile. That just leaves me to wish you all a great week and stay safe trading out there.